I think right now, when we look at the consumer, when we look at the momentum in the underlying economy picking up from Q1 to Q2, not to mention, again, against the backdrop of still elevated inflation, the Fed still has a good amount of leeway to continue to move at a very slow, tempered pace, keep us in a relatively firm period, a restrictive period of policy. Remember, even after the Fed cuts rates for the first time, the Fed is in no rush back to neutral, let alone below neutral. So even after they initiate that first round reduction, it's likely that the Fed disappoints the market's expectations for a quick reversal to neutral and then back to an accommodative stance.
How should we expect this to go? Should it be 25 basis points every meeting, every other meeting, front load 50? How do you think they're going to proceed?
Well, I think 50 is off the table. And in fact, I never thought 50 was on the table. I think even during the July press conference, Chair Powell pushed pretty aggressively against the notion of 50 basis points, saying that's not even something we're considering at this point. So I do think 25 basis points in terms of each move is the baseline. The timing, however, I think is going to be, again, extended beyond the market's expectation. The market is looking for every meeting. I think the Fed goes at most once a quarter. Again, there's no rush for the Fed to remove policy firming at this point. The Fed is simply responding to an economy that's normalizing, not an economy that's weakening.